podcast you're about to hear features unique excerpts from the forthcoming book, And Then You Win by George Kikvadze and Bill Tai. And as part of this promotion, we'll be giving away 20 free copies of the special ebook. Just email rizzo@blockworks.co for your chance to win.
If Bitcoin solves even 20% of what it claims to in terms of this immutable ledger stored decentralized fashion around the world outside of the system, this will be monumental. And when I had that aha moment, I basically went all in, and the rest is history.
This company was constantly in search for fiat capital in a world where governments were against the would-be investors. People that are in it now have no concept of how hard it was to try to raise tens or hundreds of millions of dollars in a period where it felt like it was illegal to back these companies.
Quick reminder, nothing said on Supply Shock is a recommendation to buy or sell any investment or product. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.
Hey everybody, Pete Rizzo, the Bitcoin historian on X here with a truly great episode of Supply Shock. We're going to be diving deep into the newest book that you have to put on your personal list, maybe even ahead of the Christmas holidays, for those of you who are looking to get friends and family into Bitcoin, and then they fight you, a startup's untold story of grit, grind, and glory. The new book by George Kikvadze and Bill Tai. Of course, the forward providing both of these guys are legends in the space. If you're not familiar with their work, you should be, and you will after reading this book. This book dives really deep into the history of Bitcoin mining, the Bitcoin startup scene, and it all revolves around one of the central companies from those early days. I'm talking about BitFury, a Georgia-based Bitcoin miner that was among the first to emerge and then thrive and then define the current Bitcoin economy. So here to dive into their latest work and give insight into Bitcoin's past, present, and future, we've got George and Bill. Welcome to the show.
Thanks, Pete.
Thank you, Pete. Honored to be here.
Yeah, excellent. Always great catching up. I know, if you look back into the CoinDesk archives, you'll find some reporting that I did on the BitFury company on both of your work there as far back as 2014 and 15. Maybe let's start there, right? George, this work really is a culmination of, your 10 years of experience in the industry, really seeing it go from the tiniest thing, right? I mean, we were just in like small cafes, little side rooms, talking about this big idea, and to something that today, the talk of Wall Street, governments, your first central bank to buy Bitcoin this week, historic stuff. Why now? Why write this book? And let me tell us a little bit about the timing of why you're feeling retrospective these days.
Yeah, thanks, Pete. I mean, I think while we were going on this crazy journey, we always kind of joked among ourselves that, one day we're going to write a book. And sure enough, and the book was cultivated through 12 years of sort of hard-earned battles and, successes and near-death experiences and anecdotes that insider stories that haven't really been told. And, there have been many great books written by journalists and the reporters, but there has never really been a true insider story. And what I wanted to do is, together with Bill and Val and everyone who collaborated, to kind of start a wave of these survival stories to come out that will be, not the last one, that there are going to be many coming, in terms of telling people how crazy it was to build a company in a Bitcoin environment when, there were dangers lurking around, all around, from regulators, from banking sector, from, the competition itself, from the hackers. I mean, this was a wild, wild jungle. And I just wanted to tell this story of what it took us to survive and what it took us to learn about the world and learn about each other. And why now? I think because, and then you win the title. I think we as an industry come to this case of full circle of going through an operation choke point 2.0 and emerging out of it victorious. And I just wanted to culminate 12 years. It's an astrological number. It's a converse of the number 21, which is a magic number for Bitcoin, and incidentally has been following me all the time. I'm born on 21st. My house is number 21. Bitcoin has 21 million sort of coins. My nickname as a kid was Buka with a B, so B followed me everywhere. So it was kind of came together in a full circle, and I thought it was time to write this book, and here we are.
Well, let's talk about the dangers, right? We're coming at a time when we've just seen a wave of pardons, kind of early entrepreneurs who were, bold in the space, whether it's a Ross Ulbricht or a Changpeng Zhao, sort of now finally get the clemency that they deserve. Bill, I'm curious, you come from a little bit more of a pedigreed background, right? You saw the internet boom. You came to Bitcoin with, the back story of being successful in a past age of experimentation. George is talking about the dangers here. What were the dangers that you experienced, and why do you think that early environment was so tense, right? I mean, it was just easy, right? You just hodled for 10 years and now you're here, right?
So actually, back to your other question about why now, and then into some of the speed bumps and potholes and cliffs that we went over, but sprouted wings to fly. So I think the why now is kind of interesting in front of another wave, which is the AI boom and the infrastructure required to power it. And I think many people are seeing these days the conversion of what was previously Bitcoin mining infrastructure into AI. And notably, a couple of entities that were formerly operating units of BitFury are leading the charge in this whole sector called neoclouds. So whether it's Cypher Mining or Hut 8, the spin out of Hut 8, which is American Bitcoin, while it was a very, very tough road, the BitFury entity has helped create a little over 12 billion in market cap today, which I think was probably only 3 billion of market cap a year and a half ago. So I think the timing of the book is coinciding with this inflection point. I think a lot of the technology that was pioneered by our company and this industry is increasingly relevant as we go forward. And there's more companies that George will talk about inside the footprint that are going to come out later. Back to speed bumps, potholes. I first got involved in this segment, like I did in every other segment I funded silicon companies, data networking equipment, carriers and ISPs and data centers in the 90s. And then the Web 2.0 stuff, SaaS, mobile cloud. And this segment was so appealing to me because it was a continuation of what I'd call a very broad theme of distributed computing. The world of compute started with mainframes and then moved to workstations and then PCs and ultimately smartphones. Part of that extension is what I'd call peer-to-peer computing. So back in the 2000s, late 90s, actually, there was this little wave of peer-to-peer infrastructure to allow the sharing of files, whether it be mostly music at the time.
BitTorrents and the like, yeah.
So those kinds of technologies are the root of what we see today as distributed currencies, and Bitcoin and the blockchains are the ones that run that type of technology. That was the first spark of interest. And as that wave started to unfurl, I got involved because of that. And honestly, I was very surprised by some of the potholes because I had never dealt with them before. And, typically I'll find interesting entrepreneurs on the front edge of a wave of technology, help fuel them, build resources in terms of people and customers and other partners around that. And then watch, work with the company to let it just fly. In this case, the flying did happen, but with a lot of air gaps. And a lot of those air gaps were caused by forces that I really had no way to comprehend, because in the past, I had never dealt with the early phases and building of an industry in the face of governments trying to shut you down. And I think for whatever reason, because it was became monetarily oriented, there were so many people that were drawn into the business that were not necessarily using the technology for fundamental value creation. So it, of course, attracted hordes of speculators, lots of hackers, lots of people that were just purely interested in money. People that know me well know that's not what I'm about. I like to build technology. So the ethos of the crowds around this company were very different than what I was used to working with from both sides. So both the regulators in 2013-ish, shortly after the funding of BitFury, some of the other companies I had backed did face what was Operation Choke Point 1, where they would literally go to make payroll and the accounts were frozen, no explanation, or partnerships with companies that had a lot of momentum were suddenly canceled. And as it turned out, JP Morgan Bank, with Jamie Dimon signing letters, they were sending letters to all the other banks threatening to cut them off if they didn't cut off the startups that were interesting to them in that sector. So things like that were just not in the calculus for what are the risks you have to deal with to build a successful company, but they were in this industry. And I think this is also an industry where, while it is an alternative currency in some respects, in the mining segment, which is heavily capital intensive, that's a business about drawing fiat capital to buy the silicon and servers and pay for the electricity, because at the time, nobody would accept Bitcoin for that. And so you're constantly trying to draw fiat capital to convert it into this new currency. And it was an arms race. So the bigger you got, the more money you needed. The more successful you were, the more money you needed. So this company was constantly in search for fiat capital in a world where governments were against the would-be investors, and where it's not like today. I think once the administration changed recently and the ETFs got approved, which had been limbo for literally 8 years.
Yeah, decade.
Yeah, I think once capital availability changed, the dynamic of the industry changed. So I think people that are in it now have just no concept of how hard it was to try to raise tens or hundreds of millions of dollars in a period where it felt like it was illegal to back these companies. It was torture, but somehow we got through it.
Yeah, George, I want to go over to you and your backstory, because I know you come more from traditional finance. The book kind of starts with your, journey out of that world, right, in 2008, 2009, during the financial crisis, and talks about, you finding Bitcoin early on, but from the perspective of the traditional financial system that, this technology has now grown around and is reinventing. So what were you, maybe you could take people at home into your first impressions that the book goes into, and talk a little bit about that journey from, the background of really, you were at the center of the fiat world.
Yeah, I mean, I think my experiences with fiat and the centralized government started way back growing up in Soviet Georgia, in a family of doctors. And when one day, when waking up and Gorbachev announcing a new reform, I forget what it was, and basically ruble devalued by like 99%. Basically all the life savings of the parents that were put in a Sberbank, Russian central bank, Soviet central bank, they were erased. And that, that was a massive kind of wake-up call from that standpoint of, kind of not trusting the centralized governments, being wary of central banks and printing money. And that was sort of my kind of DNA in terms of upbringing. And then, I was a big fan of mathematics. I loved math. I loved numbers, and I learned how to trust mathematics and numbers early on. And coming to US, I continued the journey. And when I went into traditional finance, it was always kind of having that baggage in the back. And once Bitcoin was discovered, Actually, one of the early people that I connected with was Wences of Zappa, and we connected instantaneously. And the reason, because he went through the same thing in Argentina, as well as Mickey Malka of Ribbit Capital. He went through the same thing in Venezuela. And we, living different parts of the world, we connected instantly. And when I started doing due diligence analysis, kind of dig deeper, started taking Khan Academy courses, talking to folks, I realized, listen, if Bitcoin solves even 20% of what it claims to in terms of this immutable ledger stored decentralized fashion around the world outside of the system, this will be monumental. And when I had that aha moment, I basically went all in, and the rest is history.
If you were to ask me, is a recession coming? The first question should be, is the market going down? This is why the forward guidance is way more important than the actual policy.
I'm Felix, host of the Forward Guidance podcast, and somebody who's wildly obsessed with all things macro and crypto and where the two worlds collide.
Once we looked at the world through this lens of the debasement of fiat currency, we realized there's actually only two assets that outperform this.
10-year yields went from 360 to 480 in 5 months while the Fed was raising rates. Sorry, Jay Powell, that was a rejection of the policy.
Whether it's Michael Howell breaking down global liquidity or Joseph Wang dissecting monetary policy, we talk to the best and brightest so you can always stay on top of the most important stories driving macro.
You add up tariffs and big beautiful bill, the train has stopped. In fact, it's going in reverse.
A year ago was the first time in 25 years of doing this that every little single thing that I looked at told me to sell.
We cover everything from inflation to interest rates to bonds and Bitcoin and all the biggest forces shaping the global economy. Subscribe to Forward Guidance and stay one step ahead of the next big move.
I do want to focus a little bit also on the BitFury company, right? Very historically important to Bitcoin. And at a certain point, one of the two largest providers of ASIC chips to the entirety of the industry. This is a story that, maybe has become a little bit less well known. The mining industry has really changed significantly, right? Early on, there was a number of kind of venture-backed startups. There was a huge kind of cliff where, many of them failed. In some cases, I'll remember the case of Sam Cole sort of, shutting down KNC Miner a few days before the market, picked up again and went up for a period of years, right? So this was a really difficult business. BitFury, sort of an early triumph among a lot of folks who didn't make it. Bill, I was wondering if you can speak to that, right? So it sounds like you got connected to BitFury very early on, maybe learned about Bitcoin through the company. Can you talk about that early sort of environment of mining? Because this wasn't sort of an original idea that BitFury had, right? Everyone was racing to be the mining company. There were 1,000 different ideas. Maybe take us a little bit into that time period.
Yeah. So I think because I had been toying with peer-to-peer technology previously and had been part of a launch of a currency in Second Life back in 2003, I got interested in the space and started to look at, understand what the process of mining was. And most people in the beginning started just running the Bitcoin software on computers, like personal computers, laptops. And over time, it was clear that if you had more processing power, you could generate more Bitcoin because your rewards were whatever percentage. Like if the world was this and you had this much percentage, you would get that many coins over that period. So the more hash power you have, the more money you'd make. And so people looked at ways to try to speed things up. So they went from laptops to using graphics cards that processed a little bit more in parallel, to using FP field programmable gate arrays to really tune the computation to exactly what the algorithm was, and ultimately ASICs. So in the window, probably 2011, 12, 13, there were maybe 5 or 6 companies that broke out. And they had names like KNC Miner or HashFast or Butterfly Labs or what have you. And I looked at
Davalon,
yes,
as well.
Yeah. So I looked at several of those companies as possible investments, and in the end, I didn't fund those because the success of a silicon company depends on volume, and the volume at the time was growing fast, but it was still very small compared to the unit volume of things like smartphones that were shipping in the hundreds of millions to billions. And hard to know what the unit volume of Bitcoin mining was at the time, but big shipments.
Well, there were some folks who thought they would be in refrigerators and cable boxes and,
Yes,
and all sorts of things, right?
We actually came up with a light bulb that had a Bitcoin
Right, I
mining
remember,
a Bitcoin mining chip in it, and there's lots of light bulbs sold. But because the cost structure to develop any semiconductor chip is high, and the purchases of wafers is also a capital intensive thing where you have to have enough money and enough volume to go to a big company like a TSMC to place an order. Otherwise, it's just not worth it to them. And so there are like kind of minimum requirements that are pretty large. It was a very hard type of thing to finance. And the teams at the time were trained in traditional methods. So there were teams that were ex-Intel, ex-Sun Microsystems, kind of digital designers that would use very standard but very expensive tools from Synopsys, Cadence, etc., and go through a process where they buy millions of dollars of tools, license those. They would simulate these chips on other big compute stuff and then spit out a chip that was, very functional, very fast, but done with old standard methods that were very expensive in an industry that couldn't really handle high cost yet. So a lot of the CPU designers of old designed for high performance, almost independent of the cost, because if you've got a good compute chip, everyone will buy it. So most of those had cost structures that didn't make sense to me. And through the introduction of a young miner himself, Nico Poonen, that led to he ended up becoming part of the team at BitFury. I was able to observe, their progress over a couple year period where they were leading the way on how to use laptops, how to use graphics cards, how to program FPGAs, although none of them had that background. And Nico one day told me, we were ahead every one of those waves, and everybody would eventually catch up. We need to build our own silicon chip, and that's what we're going to do. Will you fund us? And I was just, I was so skeptical that they could even consider doing a chip, because I do have a semiconductor chip design background. And I just thought it would be impossible for a distributed, somewhat random team spread throughout parts of Europe, Finland, Republic of Georgia, Latvia, Ukraine, that had no training at all ever in semiconductor design. I just thought it would never, ever be possible. And he just kept pounding on me that they're doing it. And I finally started to, I was like, well, I looked at what they were doing, and their methodology was very unique because they had not had standard training. Everybody else would do things the same way, and they were very expensive and only so competitive. These guys had developed a very unique methodology because they knew the needs and didn't have those tools. So they literally handcrafted a mixed signal chip, not a pure honking, like Ferrari-like digital chip. It was a very elegant design, mapped exactly to the needs of the day, very stackable, could work in environments where the electricity wasn't perfect. And they were already kind of, going for it. So I was like, wow, if this works, it will completely undercut the cost structure of everybody else, and the performance is going to be great. They'll be able to use this in a lot of places where the big digital chips just can't work. And sure enough, it worked. So BitFury,
I'd say,
and George, I don't know the year, but there was a year where we were 40%. The BitFury chips, just handled by BitFury's data centers, were maybe 40% of all the world's Bitcoin mining. Plus, they were selling chips to other people. So the architecture was probably, the majority of mining for a couple of years.
Yeah, 2013, 2015, in that window, yes.
Yeah, I was going to say, George, I would love to hear your thoughts. So again, caveat to the listeners out there, I have not read the book fully yet. I did get my advanced copy today from George, but personally, I'm really fascinated in this early history of the birth of the ASIC, right? It was a space race where, people around the world were coming together, trying different things. Bill mentioned a number of companies that, each has their own sort of heroic journey of, being the company that almost made it and then was destroyed. Butterfly Labs, built the first one of the first ASICs, taken down by lawsuits from a million people who never got their chips. Avalon, Yifu Guo, kind of first to market, but then, the same, weren't able to kind of produce and ship. How much do you get into the story of sort of the building of the first ASIC that you guys put together? And I know maybe I'm prying a little bit, but feel free to answer. I know there's a mystery character in the story identified in the book as X, who's pretty integral to the Bitcoin history of producing this ASIC. I was wondering if you could tell us a little bit about how you frame that time and what you're able to share.
Yeah, I mean, you got to understand, Pete. I joined the BitFury story and the whole journey when the entire network was less than half of petahash. Okay, so it was wild days.
Today, right? Close to a zeta hash.
Yeah, we are approaching. Yeah, I think that we even bypassed it. So I mean, we were early, and the story and the opportunity was introduced to me by Marat, whom you know very well. And, Marat, who has a knack for entrepreneurial ideas, has known Val through his Latvian context. And he was pestering me about Bitcoin when it was 10, it was 20. And at that time, I'm involved in Ukraine agriculture investing, doing deals with Cargill, Morgan Stanley, all of this. And leave me alone. But then, interestingly, there was a Cyprus banking crisis.
Oh, right.
And that was a major wake-up call. I don't know how much it sort of percolated in the United States, but in Europe, it was a major deal. And actually, a few of my friends' accounts were shut down and, wiped out. And the Bitcoin went up to 300. And I'm like, okay, this is something very interesting. And as part of discussion with Val, understanding the industry, I met with, all the colorful sort of individuals, including X, including Vlad, including Malix, the Ukrainian sort of geniuses that comprise the team. And I just realized they just were on a different planet, they were kind of in a different realm. And from the standpoint of, at that time, they already put together their own kind of risk capital to go to UMC and taped out the first 55 nanometer chip that came out and blew everything out of the water. And I'm in the midst of that when I'm realizing, okay, this is just a hodgepodge of ideas. We really need to start putting structure around it. We need to really putting, right audit, right board, right advisory, right corporate governance. If we want to go and raise capital, because the biggest issue was they were mining thousands and thousands of Bitcoins every day.
Thousands.
And yeah, I mean, there were days we would mine 2,000 Bitcoins, These guys, when I sort of met them, they already had 300,000 or 400,000 Bitcoins. And their biggest, the first chip that they taped out at UMC, I think they spent close to 150,000 Bitcoins, to transfer into fiat and, to bootstrap the operation. And the issue was, how do you get the fiat, as Bill said earlier, in order not to diminish the stash of Bitcoin? That was the race, to get the fiat in order to go out for the tape out, bring in the chips, put together the data center, mine more Bitcoins. And the whole journey was structuring the story and going and talking to, then investors in terms of raising capital. And I think at the time, we approached everybody in Silicon Valley. And I talk about in the book, we sort of, we were really early. And the field at that time was quite competitive. There was Cointerra, there was KNC, there was 21E6, which secured a lot of money from Silicon Valley. And I realized that the sort of the pitch to the Western Silicon Valley folks was not working. We were not from Stanford, we were not from MIT. X picture was in a in a sort of a motorcycle helmet. I think that didn't help as well. And Bill tried his best to to present, and we thought our numbers and our hash rate and our the architecture of the chip would work miracles, but we realized that that was not the case, and we had to pivot. And I talk about in a book about pivoting and going out for our data center and building the new data centers on our own, and then securing the funding from Bill and the friends from Octai community, the kite surfers that were our angels, and basically bootstrap this story. But at the end of the day, for me, uh, it's people like people like Val. After talking to them, I realized, wow, okay, these guys are on a different planet, and if anything, I'm gonna make a bet on their IQ power, and that's how it went.
Well, I gotta probe a little bit more because I really do love the early mining story, and one of the things that I love that you touched on was just how Silicon Valley just seemed to miss Bitcoin mining. Right, there was just a ton of capital put into it from, really these are the figures who were driving everything in Web 2.0, had just kind of, the companies that were incubated at that time, the Facebooks, etc. And then you have the mining race where you mentioned 21E6, 21 Inc. sold to Coinbase. This was really like a vaunted Silicon Valley startup race, hundreds of millions of dollars. And at the same time, it's who wins the race. It's the BitFury team from, scattered around Europe. It's the Bitmain team out in China, mining with, in rooms with 3 walls, maybe not even like a full fully completed building. And so, Bill, I'm wondering if you could speak to that time. Why do you think that it's fair to say that Silicon Valley missed mining, and why do you think they weren't able to wrap their heads around the opportunity?
Well, you mentioned 21E6. I think they tried. So I think there were very, very well academically credentialed people that got into the game in that company, and they drew kind of opinion leader capital. So whether it was A16Z or the circles around Founders Fund, Peter Thiel, I don't remember the exact amount they raised, but as you mentioned, it was maybe $140 million or something like that. And so they started, and because all the big names that do take that kind of risk were in that company, they kind of sucked the air dry from all the other venture firms. I think ended up looking at that saying, well, how can anybody compete with a bunch of guys?
The David versus Goliath story.
Right. And and then you had a decentralized scattered team, in this case from Republic of Georgia, Ukraine, Finland, with no chip background at all, and the one guy that was really driving the chip design refused to have his name or face or anything in the presentation deck. So all we had was a team picture with one guy in a motorcycle helmet that said CTO and wouldn't reveal his name. So of course there's going to be skepticism around that in a heavily capital intensive industry. And I think the 21E6 guys, I don't know their company in great detail, but I think they had set up mining operations. So they were generating some revenue, whether or not it was from their own chip. I think because they seemed to have a lot of momentum at the time, there was just no capital around the Valley. And I think BitFury's presentation of a deck with a guy in a motorcycle helmet, oh, we're counting on him. Well, who is he? We can't tell you. So that was quite an obstacle. And anyway, I think ultimately 21E6, I think because it is it is very hard to deliver really good silicon. I think they probably did use traditional methods, and I think their chip worked, but it wasn't as performant as this mixed signal architecture I talked about. So I think in the end, they kind of faded away.
Well, I know there are some big names in the book. There's a bit of Richard Branson on his island. Kind of take us into that, how he became one of the early sort of incubators around the industry, and kind of was pretty pivotal to the BitFury story as well. George, over to you. Can you take us into Necker Island and give the listeners a little bit of a preview of what they'll see in the book from some of these figures that they might know and have heard of in other stories before?
Yeah, maybe it will be better for Bill to take this question, as he was the conduit and the
I'll start it and then
hatcher
hand
of
it
the
to George.
idea. Yeah, why don't we do that? Hmm.
Yeah, so it's really a strange thing how kiteboarding has led to so many opportunities for me and this company. Dating back to 2000, 2003, I had a data center company that had gone public that I'd founded through went public through Morgan Stanley, Goldman Sachs, and I retired for a bit, and I ended up kiteboarding, switching from windsurfing to kiting, got pretty good, ended up as a sponsored athlete. And so I would do these trips with this community that this logo is representative of, but it's a community of athletes, conservationists, technologists, artists, and innovators. And it's a 501c3, and we would do trips, kiteboarding trips, like twice a year on Necker Island with Sir Richard. And because it was a heavily tech-oriented community, with a lot of the early people from Google and Facebook and Twitter and all the kind of the Web 2.0 children, we would kiteboard there and ultimately end up telling each other what we were working on and sometimes fund each other's companies. That turned into a contest that was called the Extreme Tech Challenge. And we would run a cycle every year where we would have people in our community enter this contest. 10 finalists, semifinalists would present at the Consumer Electronics Show in Vegas. 3 would come to Necker and present to a panel of judges, including Richard. So we were throwing these contests. That's now a separate 501c3 itself called Extreme Tech Challenge. So simultaneous with me funding BitFury, we were running a cycle of these contests, and George and Val came, and that's where I met the kid Nico Poonen from Finland, who was heating his apartment in Finland with Bitcoin mining rigs that ended up helping form the team. And we would have conversations with Richard trying to explain to him what Bitcoin was. And we tried, for example, to convince him. He had bought Northern Rock in the great financial crisis, renamed it Virgin Money. We were actually having discussions with the CEO of Virgin Money back in 2013 about making them the first really legit bank in the world to handle Bitcoin natively. So George and Val would come to the island, and they were actually, when we funded that first chip, several of the people from that kite community, including Lars Rasmussen, the inventor of Google Maps, employee 13 of Facebook, Megan Marks, the head of infrastructure for Facebook, Peter Krashkov, it was us that funded that silicon chip. So as we were doing these contests, it occurred to us, that happened simultaneous with Mt. Gox going down. If you remember that big hack, and then Ross Ulbricht getting arrested. And none of us were into, the hacking stuff or the, selling drugs over the internet. But the industry was taking on this sheen of not so nice things. And we were there with George and Val, and I said, George, we need to change the tenor of this industry. And there's a lot of things that this technology can do that can go way beyond just an alternative to to gold. And so George and I basically cooked up this idea of doing something like what was the Homebrew Computing Club that kicked off this community that allowed people to exchange information and share and grow good things. Like the early attendees of the Homebrew Computer Club in the 80s in Silicon Valley were, Bill Gates, Paul Allen, Steve Jobs, Steve Wozniak, Alan Shugart that started Seagate. The entire compute industry kind of came out of that crowd. There was no central meeting place because the industry was distributed. So, and then kick off to George, because we were there. George was at the XTC, and he's like, let's do this.
Peter, you remember back then it was so early, and there was a big gap of knowledge and education. And those early days, we spent countless and countless of hours in Washington, D.C., in Capitol, on Congress, going to various state legislatures, going to Brussels. And we started recruiting, a few of the key advisors. Jim Newsom was one of the first series advisors. He was chairman of Commodity Future Trade Commission, and Jason Weinstein, who was head of DOJ, cybercrime. And those people pulled a lot of people around them. And we started holding these meetups, started first on Necker to discuss, the power of Bitcoin. But Bitcoin was sort of a not fully accepted as a terminology, so we kind of Trojan horsed it under blockchain, and we called it a blockchain summit. And then, we started these discussions, and throughout the years, I think we had 8 events there. Richard always being a gracious host, and a lot of ideas cultivating out of, Necker Island, particularly, very interestingly, from a jacuzzi in a master suite, whether it was, doing a blockchain alliance or setting up blockchain for good, or a blockchain trust accelerator, or global blockchain business council, on and on and on. So it kind of became like an incubator idea of kind of gathering folks, entrepreneurs, government officials, sort of regulators, musicians, sports athletes, and kind of cultivating this idea of discussion and sort of brainstorming. And I think it played a very important role, because it's sort of in a space where you were building a company, but you also realize that this company cannot be successful if the environment is not built, if the environment is not successful. So we just spent a lot of resources joining various associations, starting lots of associations, whether it was Coin Center, in early days with Jerry Brito, or, going out and holding numerous hearings in Congress on various topics with Jim Newsom. And that was kind of a fabric and a glue that, kept everybody. And actually many alumni of these gatherings have, gone on to be major builders of the industry, and major contributors to what the ecosystem is. And I'm doing my part that setting an example that each one of them is going to write their own story of going through, the journey and learning along the way.
Well, I want to take us into the present and then a little bit in the future while we've still got some time with both of you here. And there are some current narratives that, your book does play into a little bit, right? This idea that, and then you win, that we've won, you've got these OGs out on the market selling, right? This is a big narrative today. The price, bouncing around the 100K, and there's some people feel like this is Bitcoin's IPO. Maybe it's over. We've got a couple of the foremost OGs here. Is this narrative correct? Are the OGs getting out? Is the party over? George, Bill?
I was looking at some of the stats on, some of the ancient wallets that have been dormant for 11 to 12 years, finally selling. And I was asking myself, why? I wonder what's happening. And the only theory I can think of is that a lot of the people that were involved in the early days are people that are out of the box thinkers, and they're looking for the next disruptive thing. And as soon as what they're working on becomes, it's vanilla standard, they're just not interested anymore. And that's the only thing I could think of, because I think the dynamic around the broad acceptance of Bitcoin institutionally now, the availability of ETFs, make it an asset class that, as everyone knows, has outperformed every other asset class in the world every year, pretty much, except for maybe 2 or 3 in the last 15. And so I think now that Bitcoin is being absorbed into the system, some of the elements that we always knew were there, it's extraordinarily traceable, which is why when the OGs are selling. It's easier to commit money laundering and crime with US dollar cash in suitcases than it is with Bitcoin, because you can trace every transaction with Bitcoin ultimately. I think a lot of the people that were involved in the early days, they're just kind of, I wanted it to be the rails for a new world, and it's becoming the rails for the old world. And I think maybe they're on to the next thing.
George, your take? I know we both know a lot of the old OGs. You mentioned the hundreds of thousands of coins. We know some folks. I felt they're still confident, right? They're still hodling. They still feel that this is, governments are just getting involved. Or do you feel differently? Do you think this is really a new chapter and folks are moving on to other technological problems?
Partially, yes. I think, as they say, conviction is expensive, and that's why few are able to afford it, And if you were a Bitcoiner from old times, you went through the waves and you stayed through the conviction. I agree with Bill. There is new excitement around AI and the promise of AI. So there may be some rotation into exciting projects. And, I think the future of Bitcoin is very bright going forward. And frankly speaking, if you look at what's going on globally in terms of global debts, global sort of governments coming up to a QE, and particularly in the United States, where you have interest payments that are massive, number one line item in a budget. It doesn't matter if some OGs are selling now, and frankly speaking, it doesn't matter, if they continue selling, because at the end of the day, the bet of Bitcoin has always been against the system. And when the system is the one that lives beyond the means, if the system is the one that continues taking an easy road out by printing money, Bitcoin thrives. So, I wouldn't be concerned. People, it's interesting in human psychology, right? I mean, here we are at 100,000 and people are disappointed, that we are at 100,000. I'm hearing, some of the connotations of that on X. But remember, I mean, 2014, 2015 was very, very lonely. I mean, we were in a $180 to $240 band, on and on and on. And it was a grind, and that was really the grind. Not even, correction after 17,000, 18,000 to 4,000, that was really kind of okay. It came and went, and yeah, it almost took us out of business, and we had to cut 90% of people and go all in and with everything we had to survive. But it's kind of these crises that really make you and harden you and make you who you are. So currently, 100,000, I think it's temporary. May we go down a little bit? Yes, but is Bitcoin sort of a one directional, sort of a asymmetric trade upwards? Absolutely. So I'm not worried.
Well, I got to get, obviously we're encouraging everybody to go take a look at the book, on Amazon where books are sold, and then they fight you. Want to get your advice for
and then you win. Yes. First they fight you, then you win.
Then you win. I want to get to the advice that you have for newcomers. So, Bill, it sounds like you're saying to folks who are, or what do you hope that newcomers to the technology get from the book? Do you think they should be participating in the Bitcoin economy? Of course. What's your advice for them?
Yeah, so I think there's that's a multidimensional question, because there's a question of as an asset class or as a place to develop. And I think as an asset class, I would say years ago, even, when I wouldn't have funded the guys if I didn't think it was going to work and really change a lot of things. And even at that time, people would ask me, well, where do you think the price will go? And that was obviously a very hard question to answer. And people that know me, I'm a very conservative, grounded guy. And I had a target of $100,000 even in 2013, 14. When I made that decision, I told people, well, if it can get to, at the time, 10% of the value of all gold in the world, it'll be about $100,000 a coin. And, surprisingly to some, we've gotten there. Now, I will say that because of the price of gold moving very rapidly to the upside the last 3 years, that number is now a lot higher because gold is worth a lot more. And I think once you cross that inflection point, I think it's become easier and easier for people to understand the basic dynamic of limited supply, easier to carry around, no storage costs. And I think the advent of ETFs that allows mass institutional capital into the ecosystem will lift it even more over time. The 10% number was kind of like a psychological boundary. I think it can go way beyond that. So could it go to hundreds of thousands or even $1 million a coin? that would not surprise me, depending on the rate of inflation and how much debasement happens with our currency. From a development standpoint, I'd say the one thing that did surprise me was the broad acceptance of alternative blockchains. Back in 2014, Vitalik presented at the Stanford Bitcoin Meetup Group, and he was trying to raise money for what would become Ethereum, launched in 2015. And at that time, BitFury had about 30% of the world's hash power. And I told George at that time, he said, George, this is like owning 30% of the routers running the internet. You could effectively build a private network on top of that and guarantee the exchange of capital on a private network. We need to build a software SaaS business to handle the transactions. And so the company set about to build what ultimately came out as something called Exonym. We made some decisions that I think thwarted its success early because it was targeted towards enterprise. It was Java on top of Rust on top of the Bitcoin blockchain. And I think because of the governments being so anti the technology, legit enterprises didn't want to go there. And Vitalik was he was so young and unaware of the risks that they launched a layer of software on top of the Ethereum blockchain, the Solidity ecosystem, where anybody that knew how to program Xcode to make an iPhone app could just jump on and not even have to be aware that there would be security flaws and other issues that ultimately came when, everyone knows that when Ethereum first launched, immediately hacked, right? Because there were too many abstraction layers that were not really buttoned down. And I think the BitFury approach, because they were chip designers, they knew they had to have a buttoned down framework all the way top to bottom. So it took us a little while longer to get out. But every kid that could do an iPhone app jumped on Ethereum and kaboom. And then all of a sudden the ICOs happen and every other chain. So I would say the development environment has gotten a lot more robust on many fronts, including alternative blockchains. Solana is a great example that has a lot of momentum these days. So I'd say it is increasingly what we set out to fulfill with BitFury. There's a paper I wrote, I think in 2014, 2015, maybe, that it was blockchain is to banks what TCP/IP is to telcos, meaning that it is a software framework that allows for a contextually aware cloud where rather than phone call and emails for telcos, you could put every single asset onto an internet of assets, and that would run on blockchains. And wow, it's literally happening this year. You've seen announcements from BlackRock, Blackstone, New York Stock Exchange, NASDAQ, Robinhood, Coinbase. Everybody is now moving to register assets onto the blockchain. And I think you were around when we started the Necker Blockchain Summit. George and I were trying to figure out, well, what can we do to prove that this technology isn't just the framework for criminals and, hackers and people selling drugs on the internet. It has so many real world applications. We wanted to create applications that could do good for this world. So we named it the Necker Blockchain Summit for Social Good. And we brought into the picture through Michael Casey, Hernando de Soto, the author of Mystery of Capital. And he had created the land titling systems for 13 countries. So we thought, why don't we automate his brain and turn that into what would have been called AI at the time, a little software program that registers land titles first on blockchain, and then we can port on everything else. And BitFury went on to use that type of technology to do the land titling in a couple of countries. So all that promise was still there. And I think we finally this year hit this inflection point where it's going to happen, and the majors are trying because it is more efficient and indelible. You don't have to have, kind of computers that could go down where you lose records or paper-based systems where a flood happens and all the land title information's gone. So I think we are becoming basically a TCP/IP for assets as an industry.
George, your final thoughts. Who's the book for, and what do you hope people get out of reading when they do download it on their Kindles and tablets or buy it at the store?
Yeah, I mean, I think the book is dedicated to my sons, Luca and David, and for the next generation of tech entrepreneurs, from the stories that we went through. Chapter 21 is actually 21 lessons to the future generation of tech entrepreneurs. And, I think some of the important things is the first, to have a mission, and the mission is to make a positive impact in world. Second, attracting the right group of individuals around it. I can't underestimate how vital it is to have the surrounding yourself with the right people and disassociating yourself with the wrong people, and make sure you do it right away. If the values or views or there is negative thinking, eradicate it like a cancer cell and move on. And third, to understand that, the startup is and being an entrepreneur is a very, very lonely world. Very often you are in various locations by yourself in the hotels, jet lagged, flying out. And, you have these ups and downs where you're flying high and then you're sort of almost wiped out. But if you have the conviction, if you hang around the barber shop long enough, you're going to get a haircut sooner or later. That is the sort of the final word on this. And believe in yourself, believe in the team around you, and go with the idea of making a positive impact, and persevere, and good things will happen to you. That is the story. That is our story, and been so grateful that fate has sent us Bill Tai. Without Bill, we would not have accomplished what we have accomplished, and few other individuals that, as band of brothers and sisters, came around us and helped us on this journey. I kind of depict our story. BitFury 2013 was like a little Mowgli in a jungle, with all the dangers. And as years kind of passed by, this Mowgli grew up. Now we're sort of adults, and our DNA sort of percolates through the industry. And we continue being huge believers of Bitcoin and what it will do for the humanity. The price, whether it's going to go to 1 million or eventually to 10 million and flip gold, that's just that's a certainty. It will happen sooner or later. But more importantly is that in this journey, you learn a lot about people around you. You learn a lot about life, and you learn, most importantly, a lot about yourself. And now I'm at a stage where I want to go in and mentoring younger entrepreneurs, funding them, seeding them to go out and make a world a much better place. So that was also one of the purposes this book was written.
Beautiful. And then you win a startup's untold story of grit, grind, and glory, a #1 bestseller out where books are sold. Want to thank Bill, want to thank George for coming on. For now, this has been Supply Shock, a Blockworks podcast.